you were saying that, my eye flicked up to the date on my computer, and it made me realize that precisely 1 year ago, March 2020, my last business trip before the world ended was in Mumbai with you and the team racing around down between a whole bunch of clients and prospects. You know, a great thing. 2 weeks I spent with you, and it's such a shame I can't be there in person. But you never know, maybe next year. Yeah. So thinking about the philosophy of it, I remember back way before R3, I was looking at things like I was looking at the public blockchains, you know, things like Bitcoin and then Ethereum and things like that. And I was trying to get clear in my own head because the way I think is by trying to explain things. You know, I learn by writing, I learn by talking. And I was trying to get clear in my head about, you know, what is it that's qualitatively different about these things? You know, what has changed? Yes, there's the crypto economics, there's the people getting rich, there's the booms, the busts, all the tokens and things like that. But at a computer science level, there's a software engineering side. You know, is there anything genuinely new? And there's lots of things there. But one thing that jumped out at me was, hang on, you know, most IT, you know, all the IT I was working on when I was at IBM and I was selling to clients, it was all deployed by individual firms. You know, we'd sell, you know, whether it would be banking solutions or middleware or application software, whatever it is, it was purchased by an individual firm to make them run better, to make their operations more efficient, to help them serve their customers better, make more money, whatever it was. It was IT to solve problems that companies had. And then I looked at what was happening in these public blockchains, and they transcended individuals and firms. They were deployed by lots of different people who didn't know each other, didn't fully trust each other, and yet had some abstract desire to transact with each other. You know, people were holding these tokens, writing smart contracts, whatever it might be. And yet somehow in this competitive adversarial world where people, if they could steal from each other, maybe they would, the system nevertheless stayed up and nevertheless allowed them to transact and allowed them to be sure. And this was the mantra that I really honed in on, allow them to be sure that what they saw on their computer about the state of the network was what their counterparts, competitors, and friends saw on their computers. I know for sure that what I see is what you see. And that sort of mantra almost turned into a philosophy as we got going with R3, because what I realized, and not just me, you know, that all the people we were working with from hundreds and hundreds of institutions was, you know what, that almost defines almost like the last remaining frontier, the last remaining unsolved problem in business, which is whenever two or more firms want to transact, you know, I'm buying from you, I'm lending money to somebody else. There's always, everybody has their own records. You know, I've got my record of the deal, you've got your record of the deal, my computer manages mine, your computer manages yours, and invariably they're not in sync. They don't agree. They have to be reconciled. And the sort of like the light bulb moment, if you like, was maybe we can bridge these two worlds. You know, this sort of, if you like, sort of mad, sort of chaotic, anarchic world that has nothing really to do with mainstream business has said, you know what, we can build systems that allow parties who want to transact to become in sync with each other. So that was kind of like, you know, if you like, certainly the vision or maybe the philosophical underpinning of it. But, and I guess we'll get onto this in more detail, immediately you get into a question of privacy, because if I'm transacting with you, I don't want the rest of the world to know that. And yet public blockchains don't work that way. Everybody sees everything. So as we started designing Corda, and this is how we got to the name, so hopefully this is interesting to the audience, we realized that we had to design it from the ground up in a way that messages went point to point, from person to person, from firm to firm. So the picture that formed in my head and that of others, and we used to draw these diagrams, was we draw a network, we draw a circle which defined the network. In a little circle, here's all the people on the network, and we put dots on the outside, you know, on the circumference of the circle. Here's a bank, here's a shipper, here's a trade finance firm, whatever it is. And then we draw lines between them. So say, you know, this firm wants to transact with this firm, so they send a message directly. So there's a line from here to here because they want to be in consensus. And then what we began to realize was a few things that kept coming back to the same word. You know, if you're a mathematician, you know, and I am, you know, my background is a mathematician at university, you know, the shortest point between two, so the shortest distance or the line between 2 points on the circumference of a circle is a chord, C-H-O-R-D. That's what that's called. You know, Corda is all about consensus. Another word for consensus is an accord, an agreement. So there's that word again. Then there's a third thing, which is we're trying to reach consensus. We want to be in harmony with each other. But of course, a musical chord, almost by definition, is harmonious. So we had this word chord, accord, corda. So, and eventually we landed on the word corda because it seemed to encapsulate all these things. And then it was only much later, we hired a guy from Italy who said, "Oh, I love," and he didn't know the history. He said, "Oh, Richard, I love the fact that you named Corda after the Italian for rope, because you know rope is like a chain." And he thought it was based on the blockchain idea, and that didn't even occur to us. We hadn't realized. So actually, there were three reasons for calling it Corda, and then there's a fourth one we hadn't even imagined. But it was all about that point to point, chord of a circle, harmony, agreement, a rope like a chain of transactions. And it was, as soon as we saw it, it just seemed too perfect. So we had to get that domain name. We had to call Corda Corda.
Nice. That's an interesting anecdote, and I'm sure it's really fate, like how it ties all of these things together. So you spoke about this point to point, communication or point to point transactions between parties. The original vision of blockchain, which was all when Bitcoin came out and some other things came out, is the concept that you mentioned of what I see is what you see could only be achieved if data was shared amongst all parties. So it seems to me like a very counterintuitive leap of logic to say that I'm being a blockchain framework or a blockchain system, but I'm focusing on peer-to-peer or point-to-point communication. How did how and why, more importantly, did you think of this, and what drove that thinking?
Yeah, it's an interesting one, and maybe to answer that, you have to go back to ask the question, why do the original blockchains, the public permissionless blockchains, why do they work on a broadcast basis? Why does every transaction get sent to everybody? Why must everybody process it? And there's a pretty basic reason, which is, take the original platform, take Bitcoin. It doesn't say this in the white paper, but it's really clear from the architecture. The fundamental breakthrough of that platform, the problem it was trying to solve, if you like, was the problem of censorship. They wanted to build a platform where somebody could send money to somebody else and it couldn't be stopped by anybody, even if it was illegal or even if there was a governmental requirement to stop it. That was the philosophical problem they were trying to solve. And so you can't trust anybody. You have to validate everything for yourself. And so that the particular implementation they ended up with said, well, if there's a new coin, there's a new token being minted, and I send it to Vivek, and then Vivek sends it to me, and I send it to somebody else. How does that somebody else know it's legitimate? They can't just trust me because I could be lying. They have to go back and see for themselves where it came from. And cash tokens, they're fungible. They could go all over the place. And so the obvious idea was, well, if you can see the history of every single transaction of every single token, then you know for sure when it's sent to you that it really is legitimate because you've seen everything that happened beforehand. When we started looking at the requirements for Corda, clearly, number one, we don't have that requirement of censorship resistance. We're working with regulated institutions in the financial sector and elsewhere. If the government says these kinds of transactions are not permissible, then our platform has to be able to support that. We're intended to augment the existing world, not subvert it. And so we didn't have that requirement. And therefore, and I think this is where some of the other platforms maybe made a mistake. We said, well, if the only reason for global broadcast is that problem, and that is a problem we don't have, then why would you start with something that's so inefficient and causes so many problems? Let's see if that requirement emerges from our deeper requirements. So then we looked at our deeper requirements, and yes, we model tokens on the platform, and I'll come on to that in a second. But a lot of the problems being solved with Corda, they're not cash-like tokens. It's things like contracts between a small number of identifiable parties, like reinsurance contracts between a corporate, their broker, an insurer, and some reinsurers. Or it's like the project that's happening in Italy, where 90+% of the banks in Italy are using Corda to reconcile accounts and balances between different branches. It's very clear who you're communicating with. Branch A of Bank A is talking to Branch B of Bank B. They're the only two people who should see it. Why would you start with a design where everybody sees everything? So for a vast number of cases in Corda, the data really only needs to be seen by certain parties because tokens and information would never flow beyond that. But, and this gets us maybe to our new product, sometimes in Corda, you do have things like tokens and cash that do move widely. And you, just like in the Bitcoin world, if you receive one of these things, you do need to know where it came from. So similarly in Corda, if I received cash from you, Vivek, that you'd got from, say, Barclays Bank in the UK, I would turn around and say to you, that's nice, thank you for giving me this money. but prove to me where it came from. I need to know this is legitimate and you've not just made it up. And then you would then show me the history. But there's a problem there. I'm not seeing everything. Corda is massively superior to the platforms that show you everything, but I still see something of the history. And so in parallel for the last few years, we've been working on a separate project that says, can we even eliminate that piece of privacy leakage? Can we encrypt what we call the back chain? Can we encrypt that bit of history? And the fruit of that project has actually broadened way beyond our expectations. And rather than just solving that narrow privacy problem, what we ended up building, this thing called Conclave, which I can talk about if it's helpful, is actually a fully fledged privacy platform for a whole bunch of other use cases. But it began from that insight that you don't need to share all data with everybody when you're building a blockchain.
So that's interesting, and I'll come to Conclave in a bit because I do want to talk about privacy is now becoming a bigger and bigger factor, driven by a lot of stuff that's happening outside of the enterprise blockchain world with the Facebooks and the likes and Cambridge Analytica and all of that. But it's becoming a centerpiece. I'll come to that, but just before that, one digression. It seems like what you are saying, if I were to distill what you were saying, is that all platforms are not created equal. All blockchain platforms are not created equal. So I'm sure there will be a lot of people from corporate startups in the audience today who are thinking of launching blockchain projects or thinking of creating startups on using blockchain technology. Could you give them some tips, some guidelines on what should they look at while selecting a platform, right, Corda or otherwise?
Yeah, sure. And you're right. They're not created equal, and it would kind of be a boring world if they were. It would be as if there's only one model of car or there's only one car manufacturer. It would kind of be so dull. And it's great to see how the market has almost there's been this almost like a sort of a biology like Cambrian explosion of platforms. The questions I'd ask, so what I know is the business world would be things like, what kind of business are you transacting? Are you trying to represent real world money, cash that needs to move around, or are you trying to represent real world, manage and monitor real world legal agreements? If it's a legal agreement, who writes the business logic? Is it sort of really deep developers, or is it business developers or people in the line of business? So how important is it that it's easy to write these contracts in languages they understand? To what extent are you transacting with people you know? Do you need an identity layer? Do you need, if you're going to open up a connection to a specific institution, how important is it that it really is them you're talking to and not someone pretending to be them? Do you need a strong identity layer? When you get told that a transaction is final, how important is it that it really is final, or that it's 99% certain it's final? If I was selling my car and somebody gave me the money for it, but there was a 1% chance that when I looked in my wallet tomorrow, the money was gone, but they still had my car, I'm not sure I'd be happy with that. So there's those kinds of questions as well. But it's like everything. This industry and these technologies are so exciting. There's so much going on. It is so easy to be completely enamored by the technology and the innovation. But we always have to remember, certainly when there's people paying our salaries, it all comes down to what business problem are we trying to solve? What are the requirements, and which is the right tool for the job? Nobody in 2 or 3 years' time will thank you for having chosen an innovative or sort of like clever solution because it was fashionable. They'll thank you for actually getting something live that solves a business problem. So make sure you know what that problem is.
That was some really helpful tips. I think it's almost like a flow chart in my mind. Look through some of these and then take your decisions, and platforms fork along the way. So let's go back and spend maybe 5 minutes. I have a lot of questions coming in, but let's spend 5 minutes on the privacy angle, right? Privacy, as we all know, is becoming front and center. Whether it's a fad or whether it will stay, I think my money is on the fact, especially with what Apple and others are doing, that privacy will increasingly become more important. So how does blockchain evolve in the world obsessed with privacy? And, is it, and yeah, maybe just start with that and we can ask some follow-up questions.
Yeah, so as we were building Corda and we were working with all these projects with clients and partners around the world, you know, I keep going back to this philosophy. How do I make sure that what I see is what you see? But and I would argue, I guess I would say this because it's my baby, but I would argue Corda is superior at that problem. But every so often we'd come across problems that Corda was not a fit for, and in fact, no blockchain was a fit for, because what these firms in a market wanted wasn't to synchronize data with each other. They often had proprietary client data or proprietary business data that they did not want synchronized. And yet, and this sounds counterintuitive, almost perverse, they didn't want that data shared with their counterparts, but they did want to be able to bring it together somehow to divine some insight. So one example is, and I talk about banking a lot because it's what I know. But if you're a bank and you're under the purview of the US government, which basically means anywhere in the world, you have an obligation to detect and stamp out money laundering. Now, as a bank, you can look at all the transactions going across your different systems. But sometimes it's just hard to do that because the money launderers are clever and they move money between accounts at different banks. So and you as the individual bank, you haven't got a God view. You can't see everything. And there's no way you're going to show all your customer data to your competitors. It's a competitive risk and it's not fair on your legitimate customers. So imagine if they could bring that data together, so somebody could look for the graphs of the payments. So the money went from bank A to bank B to bank C, and then back in through the back door. You could see you could identify so many more examples of this fraud. But who is angelic enough to run that service? Who would you trust that data with? A single firm, a single organization who saw everything. But what if, when you sent that data somewhere, you could know for sure? So this is you as a bank. What if you, when you send that data to this analytics firm, for example, you knew for sure that the only thing their computers could do was integrate your data with the other banks and spot patterns, but nothing else? No human, nobody in that firm could see the data. All they could do was run a computer that was doing the analysis. If you knew that, maybe you could use that service. Long story short, the problem that you have in that world, the problem we identified was lots of firms want the ability to know what will happen to their data when they send it somewhere else. So not only that the data has safely got to the other side or the data has actually got to company A, they want to know when it gets there, what will happen to it, and by extension, what cannot happen to it. And we kept hearing that requirement again and again over the last few years.
Sorry, Richard, if I may ask, so what is the solution for that? Is it we hear about zero knowledge proofs as a solution. We hear about homomorphic encryption as a solution. I think R3 has made a strategic bet or a choice on hardware-based solutions. So can you just talk through that? And that'll be my last question before I take some questions from the audience.
Sure, and so exactly as you've implied, that problem I've set up, how can I be sure what will happen to my data when I send it somewhere else? There are a variety of advanced techniques that enable that, and we looked at all of them. And I mean, I won't go through them all now in the interest of time. But what we needed was a solution that would allow us to have our data, send it somewhere else, and know what would happen to it in advance, and know that the people we send it to couldn't process it. When you work through the requirements, the one that dropped out as if you like, the obvious choice for our requirement was actually a hardware technique known as confidential computing. And so that's where we invested our time. We built that primarily initially for Corda, and then, as I say, we discovered this broader set of problems where firms in general want to know what will happen to their data when they send it somewhere else. The problem is, and this is where we think there's an opportunity, is the confidential computing landscape has matured rapidly. Some of the viewers here may be aware of technologies such as Intel's software guard extensions, AMD, the other big chip manufacturer, has something called SEV. Our partners at IBM have something called HyperProtect. But I think all those vendors all those chip manufacturers would willingly say the technology is maturing, but it's still hard to use. You have to be almost a systems programmer to make progress with it. And we realized that the problems we were seeing, these are problems that businesses had, people with P&Ls, people who were trying to grow their business. So there was this big gulf between the capabilities of the technology down here and the ability of people, developers, to consume it up here. So we shipped Conclave, our second product, which is focused almost exclusively on bridging that gap, making it ridiculously easy for developers to take advantage of these new technologies. So that now you genuinely can, if you're providing services to other firms, you can genuinely now write applications that can prove to their users what will happen to the data when you receive it. It's mind-blowing. It's not often in a career that you come across like two groundbreaking technologies, blockchain to start with, and now the related sort of adjacent technology of confidential computing. But net, confidential computing enables that promise, but it has to be made accessible to the people who can benefit from it, who are developers aligned to people with P&Ls in serious businesses. And I think that's where Conclave, our new product, is intended to bridge that gap.
Excellent. So I think it's not very often that in a career you get to invent two new technologies. So credit to you for that. But I think, at least when I think about it, it's something that R3 also did with Corda, which is making blockchain applications easier. One of the things that I pride myself on a lot is that India has the largest number of certified blockchain Corda developers in the world. And one of the key reasons is because we made it so easy to develop applications on using Java. And there are millions of developers here who know Java. So hopefully
For sure.
Leverage that trend.
For sure, so many high quality developers in India, and I'm seeing the same trends with Conclave already. I track where the downloads are coming from. Anyone can get a trial from conclave.net, and I think India is #1 on Conclave downloads as well.
Excellent. So I think we have 6 minutes. So I'll just take a couple of interesting questions that have come from the audience. And I think the very first question is actually quite insightful. It says, what are the few global learnings on blockchain implementation that India can utilize? So maybe you want to talk about some of the big implementations globally, and you've been there. So what are the learnings from there?
Yeah, so first of all, I mean, there's an implication in that question, which is correct, which is that there are some big, large-scale deployments of enterprise blockchain where I focus. I've talked about the Spunta project in Italy. There are some very successful large trade finance networks: Contour, Marco Polo, Insurance, B3I, digital assets, SDX, HQLAX, things like that. All terms people can Google. I think there are many learnings, but two key ones are it's a team sport. Multiple parties have to be brought together. That's kind of obvious, if you like, and maybe a bit of a cliche. The thing that's less obvious to people is if you're trying to get lots of large organizations to work together, you have to get the incentives absolutely right. The big firms are not charities. There has to be something in it for everybody. So I think people who start blockchain projects thinking they're going to disrupt an industry or they're going to take out a middleman, it's the wrong way of thinking about it. It's all about for me at least, it's all about making existing markets work ridiculously so much better. And to do that, you have to identify, what is the win for each participant. Maybe their relative market shares will change, maybe the economics will change a bit, but there has to be something in it to make everybody want to move it forward, because getting lots of firms to do things at once is hard. So there has to be a win for the participants, and there has to be a win for the participants' customers. It has to be a win for the end user as well. So I think that's the overwhelming thing for me is get the incentives right, and then everything else follows from there.
Great. And the second one, I think someone picked up on our discussion on privacy. And there's this interesting question which says, can blockchain move ahead of the data privacy bill? They specifically say in India to share sensitive data on Ledger. We don't really know what's in the final form of the India bill, but it's modeled after GDPR. So let's assume for a moment the IDPR is similar to GDPR. Then how does blockchain move ahead, and do some privacy preserving techniques have a role in that?
It's a good one, isn't it? Because if you think about, if I look at, say, blockchain and confidential computing clearly helps because you can constrain what data is used for when it leaves your hands. It's almost like you can put it in a box and say you can use it for purpose A, but not purpose B. Blockchain's more interesting in that blockchain exists to synchronize data between two or more firms. So at least that's my conception of it. So there's an assumption at the start that this data is legitimate to be shared. So if the data cannot be shared with somebody else, then you shouldn't be sharing it, and therefore you shouldn't be putting it on a blockchain. But if I look at things like GDPR, there are other obligations in there, including the obligation that the data is accurate, and that if you're going to make business decisions about your customers, those decisions, especially if it could affect their lives, do they get a mortgage? What interest rate do you charge them? Do you put a mark on their credit record? When you make decisions that could affect people's lives, you have to make those decisions based on accurate data. And therefore, the idea that blockchain can help ensure that your records are correct because they're synchronized with other people who maybe have a better version, that can directly help you comply with your obligations under that regulation. But there's no silver bullet. You have to figure out what problem you're trying to solve. If you're not allowed to share the data, do not share it. But if you have an obligation to ensure your data is correct, then use platforms that allow you to ensure your data is correct, and blockchain is one of them. Oh, you're on mute, Vivek.
Sorry, so I think I'll just take one last question before we wrap up. So I think one question says, can you suggest a first step to promote inherent use of blockchain in government operations? Any global use cases that may support this? And I just want to be a bit prescriptive here. So I think government is, of course, a vast field, but you did work very closely on the land registry use case in UK. And land registry is a hot topic here. So can you shed some light on that? Some people might find some inspiration there.
Yeah, it's an amazing project. So there's a startup called Coadjute, Coadjute. It's a hard word to find in the dictionary. Who had this insanely clever insight, which is only obvious in hindsight, which is if I look at the UK property market, for residential properties, and I'm sure other countries are the same. The UK has a land registry, but there are lots of other parties involved in the buying and selling of property. There's the buyer, the seller, there's the solicitors, the lawyers working on behalf of the buyer and seller, there's the seller's agent, there are people inspecting the property. There's a whole collection of participants. There's a really complex multi-party business process. And certainly in the UK, that business process is not centrally managed. It relies on the cooperation and coordination of all these parties kind of knowing what needs to happen next. There's huge amounts of paper, there's huge amounts of inefficiency, stuff gets copied, it gets lost. It's so stressful for the buyer and seller. The insight of Coadjute was, well, there's one party who is involved in everything, the land registry. That is the source of truth, whereas there are multiple competing parties at every other layer. And then their insight was, if we could somehow just make it easier for these parties to identify each other, find each other, and manage that process, but importantly, back to the previous insight, without introducing a new point of control or a new part of the market or changing the structure of the market, it could be a win for everybody. The estate agents can help sell more properties, the buyers and sellers can get the deal done more quickly, the land registry gets higher quality data, the solicitors can do more business. Everybody wins, the friction goes down, and people can move house and actually sort of, grow their families or move jobs or whatever it is. But it's all based on just allowing these parties to find each other, transact, and do so to ensure their data is in sync. And they're building it on Corda because that's what Corda is for. But back to the government question, it's highly dependent on the cooperation of the government agencies, in this case, Her Majesty's Land Registry.
Right, Richard, I think we are out of time, but thank you so much for sharing your insights with us. And I think the audience also would have found it useful. Thanks so much for your time, and we look forward to having you over in India again soon.
Cannot wait. Thank you.
Thank you, everyone. Thank you for joining the IAMAI Blockchain Summit. And please visit the booths for other events and other speakers. Thank you.